Your credit card application was rejected, not because of your score, but because of a number you've never seen. You did everything right, paid every bill on time, for years, kept your balances low, avoided debt, built your score to 720. Then you applied for that rewards card you wanted, denied, you stare at the email and read it again. We're unable to approve your application. What just happened? The internet said 700 plus score gets approved. So why are you holding a rejection letter? Here's what nobody told you. Your credit score, it's only 30 to 50% of the decision. The other 50 to 70%, factors you've never heard of, ratios you've never calculated, rules you didn't know existed. 21 to 35% of applicants get denied, even with good credit. For premium cards, denial rates hit 40 to 50%, not because they're irresponsible, because they don't know the real rules. This video exposes the 8 hidden reasons you got denied and how to fix each one. By the end, you'll know exactly why you got rejected and how to get approved next time. Let's start with the lie everyone believes. Everyone says the same thing. Get your score to 700, you'll be approved. But that's a lie. Your score is just a headline. And banks don't decide on headlines. They read the full story. Credit scores cover only 30 to 50% of decisions. The rest, 8 hidden factors. 2 people with 720 scores, 1 approved, 1 denied, same score, different outcome. So what actually matters? The first hidden factor is a ratio, and it might be killing your application right now. Let's say you make $5,000 a month, but between your mortgage, car payment, student loans, and credit cards, $2,100 is already gone. That's 42% of your income going straight to debt. And when banks see that number, they get nervous. Sure, you've never missed a payment. Your credit score proves it. But the bank isn't asking, did you pay? They're asking, can you handle more? At 42%, the answer is barely. Here's how it works. Under 36% is good. Between 36 and 43% is the yellow zone. Over 43%, that's a red flag. And many issuers auto-deny. Now imagine adding a $5,000 credit limit. That's $150 more in monthly payments. Suddenly your DTI hits 45%, one small income drop, and everything falls apart. So DTI measures if you can afford more. But what if the problem isn't ratio? What if you simply don't earn enough? Premium cards have income requirements. They just don't tell you what they are. So you apply for the Chase Sapphire Reserve. Perfect credit, low utilization, clean history, but then denied. Why? Because you make $45,000 and that card wants $75,000 plus. Nobody told you. Now you have a hard inquiry for nothing. American Express Platinum expects $100,000 plus household income. Chase Sapphire Reserve wants around $75,000 plus. Business cards often require $50,000 plus in revenue. These thresholds aren't published, but they absolutely exist. Here's what most people miss. You can include all your income, not just salary, investments, rental income, spouse's income. Household income counts, but only if you report it. Income tells banks if you can afford the card. But there's another factor that measures something else. Desperation. And banks can smell it from a mile away. Every credit card application creates a hard inquiry, a record saying, this person asked for credit. 1 or 2, normal, 6 and 6 months, alarm bells. You weren't desperate, you were optimizing, chasing sign-up bonuses, collecting rewards cards. But to the bank, you look like someone scrambling, financially drowning. Most issuers get nervous at 4+ inquiries in 6 months. Chase's 524 rule. More than 5 cards in 24 months? Auto-deny. American Express 290 rule. Max 2 cards in 90 days. Any more than that, you get denied. You could have a perfect 800 score, but 6 recent inquiries? Denied. Not because of your credit, but your velocity. Inquiries show how often you're seeking new credit. But there's another number showing how much you're using, and it might be higher than you think. You have a $5,000 credit limit. Every month you charge $4,000, then pay it off. Sounds responsible, right? But your utilization is 80%, and banks hate that. Utilization isn't about whether you pay, it's about how close to the edge you're living. $4,000 on a $5,000 limit, one emergency away from maxed out, under 30% is healthy, under 10% is excellent, over 50% red flag, even if you pay in full. Here's the trick nobody tells you. Utilization gets reported on your statement date, not your payment date. So even if you pay in full, a high balance still shows. Utilization measures how much you're using. But what if you haven't used enough? What if your credit file is too thin? You have one credit card, opened 18 months ago, Perfect payments, 715 score, still denied. Banks don't trust beginners. One card and 18 months isn't enough. Premium cards want 3+ years. They want 5+ accounts, cards and loans, 715 from one card versus 715 from 6 accounts over 7 years. Same number, different trust. Thin files mean not enough credit history. What if you have credit histories and some of it is bad? 2 years ago, you were 60 days late. You recovered 700+ score, but that mark still shows. The computer flags you. Late payments stay 7 years. Many issuers deny lates in the past 24 months. 2 people, 720 scores, 1 clean, 1 old late payment, same score, different result. The score recovered, the record didn't. Negative marks haunt from the past. What if the problem is now? Too many cards? Let's say you have 12 credit cards. That's $80,000 in total available credit, but you only use $5,000 of it and you're responsible. Yet somehow you still get denied. It doesn't make sense. You have low utilization and perfect payments. But here's what the bank sees: $80,000 sitting there available. And they think, what if this person maxes it all out tomorrow? That's why issuers track total credit exposure. Some banks won't extend more than $50,000 to $100,000 to one person total. Once you have 10+ cards, you trigger fraud pattern alerts. Even if you're completely responsible, you look risky. So each new card becomes harder to get than the last. Not because your credit is getting worse, but because your total exposure keeps growing. Too many cards makes banks nervous about risk. But the last reason for denial has nothing to do with risk. It's about profit. This sounds insane, but it's true. Some banks don't want responsible customers. They want people who carry balances and pay interest. You pay in full every month. To you, that's smart. To the bank, you're unprofitable. Banks make money from interest, not perfect payment records. Their models predict who will carry balances. Your friend with a 680 score gets approved, you with 800 don't. You're low risk, but also low profit. 8 hidden reasons why good credit gets denied. But here's the good news. Every single one can be fixed. Here's how. You got denied, it stings. But a denial isn't permanent. It's information. Request your adverse action letter. It tells you why you were denied. That letter becomes your roadmap. Month 1 to 3. Pay down balances under 30%. Calculate your DTI. If you're over 40%, focus on paying down your debt. Stop applying. Let inquiries age. Month 3 to 6. Request credit limit increases. Add all income sources. Set auto pay. Month 6 to 12. Build bank relationships first. Use our pre-qualification review. Target cards that match your profile. 3 to 12 months from denied to approved. Not by luck, by understanding. Credit card approval isn't about one number. It's about 8 factors working together. DTI, income, inquiries, utilization, history, marks, cards, profile. Miss one, and the computer says no. You weren't denied because you're irresponsible. You were denied because you didn't know the rules. Now you do. Your friend got approved. You didn't. Same score, different outcomes. Now you know why, and now you know how to win. Denial isn't failure. It's feedback. The system is learnable. The game is winnable. Credit card denial feels personal, but it's not. It's mathematical, and math can be solved. You now know the 8 factors beyond credit scores. DTI, income, inquiries, utilization, history, marks, cards, profile. You speak the bank's language now. If this video decoded your denial, hit subscribe. What got you denied? Drop it below. Let's solve it together.